out over time. Let's wrap up on Google. Google dropped 7% after reporting earnings on Tuesday, Chamath. Revenue up 12% year over year to $96.5 billion. Wow. Cloud revenue was up 30% year over year, $12 billion. YouTube ads surging 14% to $10.5 billion. Net profit was around $26.5 billion, up 28% year over year. So they are really focusing on profitability, obviously. Full year numbers, this is just extraordinary. Total revenue, $350 billion with $100 billion in net profit. Cloud and YouTube finished 2024 with a combined run rate of $110 billion. YouTube is basically Netflix inside of Google, and their Google Cloud is essentially AWS inside of Google. The thing that made investors get concerned, Chamath, is that Google said it would invest $75 billion in CapEx in 2025, 42% jump over 2024, 29% more than analysts expect. Obviously, this has to do with data center servers and the AI build out. What do you think about that number, $75 billion, obviously in relation to what we saw with DeepSeek doing it with maybe a little bit less, maybe they're lying? Is this just an absolute waste of money or gargantuan number, or is it something they can easily, with that amount of profitability and cash they have, absorb and use in the future?
I think I should stipulate that Google's models are probably the best of all the models across a broad base of capabilities if you test for them. And so let's start there, which is whatever they're doing is working. The thing that they need to do is be able to translate those models now into better products. And I think that will happen slowly. Like, for example, if you look at deep research, most of the people online that are evaluating deep research would now say that OpenAI is both faster and just better on the margins. All of these things can be improved. I don't think that's a comment on the base model. I think it's a comment on post-training and how they're attempting to productize these things. So the other thing that Google has is a money machine that directly benefits from these AI-driven optimizations on ad targeting. The only other company that has anywhere close to the same credibility is Meta. So I think what both of these two companies need to do is do a better job of explaining how that $75 billion gets segregated. How much of that goes to these AI-enabled models that actually do better ads optimization? There's a really interesting discussion by a former Meta machine learning engineer on X about how they did it. It's pretty amazing. It's staggering. But if they could say half the money goes to that and the other half goes to more speculative, pre-training and post-training, I think the market would have eaten it up. So it's probably more of a disclosure issue for Google, because I would say right now their model quality is the best.
You have thoughts on this build out, Antonio? Obviously, I think you've been involved with XAI and obviously you're involved with Twitter and X previously, and Colossus's colossal build out. That was extraordinary to watch in such a short period of time. Do you have concerns that, like some people do, that this build out is too expensive and it would be too hard to monetize all that expense? Or is it maybe a little bit of hand-wringing and the opportunity in AI is so obviously huge that you just got to take the leap of faith and if you build it, the revenue will come?
Yeah, I think Chamath has the right framework here, which is return on invested capital. And what he's saying by, if Google had said, hey, half the money is for ads and half the money is for speculative post-training, the market would have seen that half the money has a higher return on capital. And Google's return on capital is actually been going up after the implementation of AI models into their company. And I think that sort of abstracts the entire market, which is people are waking up that return on invested capital in data centers will matter, that the models are basic commodities and super competitive. In a best case, it's kind of a land war in Asia. It's a melee. In a worst case, just total commodities. What does matter is the return on capital data center, which is influenced by how good the data centers are. So you mentioned the XAI data center. It's a 100,000 GPU cluster. It's the most dense, coherent cluster in the world, and it will just train faster and better than other clusters. And it's also built for the most cheaply and the fastest. So XAI will have the highest return on capital, and I also think the best train data, and therefore will win. I think Google will also win because they have their TensorFlow chips. They make some of their own chips. They do focus on ROIC, and they have a great monopoly to kind of fund it all. So I don't think it's overblown. I think this is going to be, as you guys have said before in the podcast, bigger than Industrial Revolution. But it's also true that you need to have a good ROIC. And if you don't, you're not transparent about it, you can see what happens.
I would argue Google's probably been the most frugal, thoughtful, and well-managed computing infrastructure investor of all time. The 98 to 2005 era at Google, it was all about just cheap throwaway racks. That was the big advantage they had, is they weren't using the expensive Oracle servers. And they had a 2 to 3 year kind of depreciation timeline on those, but they were super cheap. And so the ROIC was quite good. Then they got into energy efficiency, which they realized was a big driving cost. They started to build systems that were more energy efficient. As a result, they lasted longer. And then their depreciation schedule moved up to 3 to 4 years, meaning they could kind of write down the value of the servers over 3 to 4 years. And then from 2010 to 2015 era, their hardware system for cloud allowed them to kind of extend through repurposing the utilization, and they increased their depreciation to 4 to 5 years. And then in 2021, I don't know if you guys remember this, they made this kind of big change to their depreciation schedule on data center infrastructure to 6 years. So when they invest CapEx in a data center, they would write down the servers over a 6-year cycle because of AI optimization on maintenance. So they started using AI just for internal management of the infrastructure. So I would view the $75 billion CapEx actually as a very positive signal for the company. I think that it means that they have a really strong line of sight on how they're going to have full utilization and great return on this. If you do the math, ROIC math on this, $75 billion, assume a 20% ROIC, you've got to be generating, call it roughly an incremental $15 billion of profit a year, plus the amortization of the $75 billion. So take the $75 billion divided by 6, that's $12 billion plus $15 billion. So basically, they would need to make an incremental $27 billion of operating profit a year on the $75 billion for this to meet their ROIC performance. That doesn't seem crazy because that's just under 20% of their annual operating profit. This is a very kind of, I think, important point, which is Google doesn't just do this to build out AI in the future. They have a really strong line of sight on how this can kind of increment, and you don't have a huge hurdle for them for this to pay back. So I don't know. I would kind of, to Antonio's point, I'd view this as a positive. I think if you use their historical ability to manage infrastructure and make predictions on investments as an indicator of the future, this is a strong and positive indicator. And I do think that for all the naysayers out there that think that search is going to evolve to chat, you could look at this as being a really important proof point that Google has the confidence that they're going to be able to move from search to chat. And as Chamath points out, they've got great performative models. And I would view this more of as a positive than a negative. If they were under-investing, I would be worried that they didn't know where to invest. But to see them make this degree of investment highlights the confidence in the strategy.
And Tony, I don't know if you've been watching the agent space or deep research that came out from Google and then closed AI. I mean, OpenAI launched their copycat version of this product. Sorry, I don't have short feelings on it. I'm curious your thoughts on job displacement. We're looking at self-driving. Obviously, Waymo's got cars on the road. Obviously, Tesla, which you were previously on the board of. And I know you were the first institutional investor in Tesla. Self-driving is pretty good. I only get like 1 or 2 disengagements per hour, and they tend to be the ones where I just want to take the turn a little sharper kind of thing. So that's getting pretty close. BYD is very close. You got a lot of job displacement that occur. Millions and millions of drivers in 10 years could lose their jobs. Researchers working at Gartner Group, whatever, Boston Consulting Group, like it feels like there could be massive job displacement. Do you have concerns about that in the American economy and globally?
There's a lot of hand-wringing about this, and it's real. In prior moments of large disruption, that there have been job displacements because there's generous people who get retrained for something else who can't retrain. So, I think there were studies Milton Friedman did of the steel industry in Pittsburgh in the 70s that the cost of each steel worker job loss was about $1 million to the economy because these people couldn't be retrained. And that might happen here, but I have a more benign outlook personally. What I think is going to happen is that you will have job loss, but the amount of productivity that will be released in the U.S. economy is going to be extraordinary, right? So GDP growth is a function of the number of people working times productivity. It's very simple. Economists want to make it more complex than that, but it's the number of people working times productivity. If productivity goes up to 5, 6, 7, 8%, you get a massive boost in GDP growth. And then what happens? Well, People can get retrained. They can get different jobs. Different services happen. People start companies. The application layer of LLMs is just starting. The barrier to start a company is quite low. Things like launch probably explode because there's all these people who don't have jobs anymore that were accountants and want to start something. It's hard to know what happens. I believe in American agility. I believe in this country. I believe that we will figure out a way to make this all work. And if there's enough productivity and money in the economy that's flowing, people will find new jobs. They will find new businesses to start. They will find new things to do. We have to get out of the way, take regulation down, and let Americans be creative and unleash the American productivity machine. Let's make that happen.
Yeah, that's, I think, really strong thoughts. And I mean, that's the game we're seeing on the field. How many companies are we seeing hit $1 million in revenue with 5 employees, where that used to take 25? So the efficiency's there. Chamath, your outlook on this issue, since it seems to be coming up again, specifically with truck drivers and Uber drivers and all kinds of other research jobs that seem to be doing pretty well, or can be done pretty well by AI. Where do you stand on this issue today?
I think it's a process. Buffett wrote about this in an annual letter, and what he described was the changing nature of jobs during the agrarian revolution. And what you saw was a large cohort of people who supported themselves through farming. And then the total quantum of those jobs shrank by 90% when you had industrialized farming and tractors and whatnot. But the economy, to Antonio's point, grew around that business and added other kinds of businesses that didn't make sense in that moment. And I think what you see is that when economies get more and more evolved, you see the growth of services, businesses that sort of are these things that can only happen when you have excess, right? The person that you pay for closet organizing would not have had a job in the turn of the agrarian revolution or the industrial revolution. Yeah. But they can exist in 2020 something, and frankly, they can make a good job. The life coach. There are all these jobs that just kind of come out of nowhere.
Podcaster, influencer,
all of that.
Yeah. Venture capitalist,
venture capital allocator, absolutely. Mutant strawberry creator.
Yeah, so I think that you're
cut that
waiting for this next turn of creativity. Like the big problem that we all have, maybe I'll take the more glass half empty version of what Antonio said, is we really haven't been unlocking people's creativity over the last 15 years. We've been trundling around, except save of a few companies, which we all know, and we can just repeat them endlessly, but we know which ones they are, that are truly innovating and at the edge. Everybody else is kind of diddling around navel gazing. So the real problem is that we have not had a lot of reps in being creative. I'll give you just a very simple example. Nick, can you find this? Even extremely staid industries. Did you see the BYD clip of the car?
Yes.
And I thought
Parallel
to myself,
park, yes, with a little swipe. It's incredible.
How tragic is it that when you look at this and you're blown away?
Yeah.
And you're blown away for 2 reasons. One is, A, I didn't think that was possible. And B, why doesn't it exist in America? But the reality underneath the hood is extremely benign how this is implemented. And so I think that the problem is we spent so much time losing the script. I think Antonio's right. When you unshackle people to not focus on the mental load of getting the pronouns right or the this or the that, you won't be so overwhelmed by things like this because you will have already been pushing the boundaries of human creativity. We need to get back to that. We need to let these creative people cook. And I hope that happens. And I think that will happen. Freeberg, can you do a science corner on the FDA approval for the non-opioid painkiller?
Wait, not today.
No, I know, but could you do it like in a couple weeks?
Yeah. By the way, the one I wanted to do is that new macro study on GLP-1s, which I think is super interesting.
Oh, tell us.
Do you guys remember I talked a while ago about how they were able to mine VA data? So the VA, right, they take care of veterans and they have all the medical records. And on an anonymized basis, they can make that data available to researchers. And so if you guys remember this is how they identified that the Epstein-Barr virus, or the virus that causes mono, as being statistically certain to be the trigger for multiple sclerosis. In the cohort of hundreds of thousands of patients that were in this data set, no one got MS that didn't get Epstein-Barr virus. If you did not get Epstein-Barr virus, you did not get MS. I don't know if you guys remember, I did the Science Corner a while ago. Anyway, so the data set that you can mine at the VA is incredible. So they pulled all the data from everyone that's been on the GLP-1 agonists, and they identified all of the health effects across multiple indications, the statistical difference between the cohorts. Okay, so this research team out of St. Louis pulled all the data from the VA database. And basically they looked at, 1.2 million people with diabetes that didn't take anything compared to 215,000 that took the GLP-1 receptor agonists and another 600,000 people that took other drugs for diabetes. So basically this cohort segmentation allows them to isolate the effect of the GLP-1 drugs. And as you can see here, this shows across hundreds of thousands of patients the effect of the GLP-1 on a hazard ratio, which means like how likely are you to have the following health condition versus the population that's not taking the GLP-1s. And then on the right, if you scroll to the right, Nick, are the increase in risk. And on the left are the things that go down. So the increase, the only thing that increased is 8% or 10% increase in nausea and vomiting.
Yep, can confirm.
Musculoskeletal complications, GRD, which is, gastric reflux from
sleep disturbances,
indigestion. Yeah, and sleep disturbance is probably related to indigestion. Yeah. So it's all abdominal stuff. Now, if you go over here to the benefit side, so the benefit side is what conditions did you see a decrease in? So you have a decrease in shock, a decrease in hepatic failure, so liver failure, respiratory failure, cardiac arrest. In fact, on cardiac arrest, you see a 30% decrease in the probability of having cardiac arrest from the cohort that's on the GLP-1s versus the alternatives.
Bulimia? Yeah. Wow.
Schizophrenia. So this goes to the point, if you guys remember the interview I did a couple months ago with the CEO of Eli Lilly, that they have all these clinical trials going on right now for different indications for the GLP-1 receptor agonists, that they're seeing that there's health benefits beyond just the weight loss in reducing things like kidney disease, obviously liver problems, mental problems, and so on.
Do we know why? And if we don't know why, do you think it's because this is suppressing the food and it's the lack of food or the change in